This video chart presentation of Continental Resources Group Inc. This is a bulletin board listed company trading on our ticker CRGC. So look at a 1-year chart. You can see now for about 8 months this chart's been on a pretty strong uptrend, regularly making higher lows. Right now trying to push through a pretty strong area of resistance. So I want to keep an eye for a breakout because there's not really any resistance in sight until 52-week highs beyond this 29-cent level. MACD trending upward the whole time. Pretty much to be expected. Stock's been on a nice climb. ADX is down very low, not getting a lot from that. Would have actually expected a little bit more of an uptrend of the ADX to show strength to a direction. Money flow index isn't in a bad spot. 7 and 21 holding over top of 50. 14 looks like it's curling back up. Going to make its way through the middle of that indicator. It's a real nice look to the accumulation distribution for a year now. Nice uptrend. Strong channel showing plenty of accumulation into play. That's also shown in the Chaikin money flow, holding in the green primarily, saying that over 20-day periods, buying pressure has been outweighing selling pressure. Per the definition of the CCI, the buy signal is given on the break of 100, and that just recently happened. It would be a hold on that definition until it breaks back down through 100. Full still, much like other indicators, holding the upper half is a sign of bullishness, bullish momentum in the case of the full still. And of course, outside of a couple little dips here and there, the momentum has clearly been on the bullish side of things. And the trend's also climbing upward, showing that there's a bullish trend. I definitely want to see this make a curl right through here and move its way back upward, hold over top of 0. Relative strength index, also a gauge of momentum, made a sharp move as the stock rose almost 13% on Thursday, putting it in a position where it broke through some resistance at 28 cents and is looking to push through this 29-cent mark that it hit in September. Of course, last time it moved above that level was way back in March and April last year, so that's a key level for continuation at this point. You can see this is a relatively thinly traded stock. Looks like they had no volume on Wednesday, traded 202,000 shares on Thursday, but identified just somewhat of an upward path like that. That's nice just to identify the higher lows. But what's most important to me is the bullish cross of the 50 through the 200-day moving average, the price per share trending over top of both the 50 and 200-day moving averages now. Because the most bullish of charts, the price per share is ahead of those two key moving averages. If there were any pullback, I'd be looking right back into this area of 24 cents for a support point. 50 days at 25 cents. Ideally, it would hold that. You can see that 24 cent, 25 cent area throughout the last year has been a support and resistance point. So any pullback, I'd want to see it hold that mark. Absolute worst case scenario, bounce off the 200-day moving average. But I'd be a little bit more concerned if it did dip back down there, since it is taking on a little bit of bullish momentum right now. Of course, as I mentioned several times, 29 cents would be the point I'd be looking for it to close above. Because above that, there's just not any real resistance in sight until 52-week highs are challenged. So it's not exactly a blue sky breakout. It is a pretty substantial moment in this chart if the stock can start to close above 29 cents. I'd certainly want to see volume stay more regular. I'd like to see an increase to break through that point. And then on any pullback after the break, I'd like to see it hold 28, 29 cents as a much higher support level and continue on the upward path that it's been creating over the last 8 or 9 months. Those are the things that I'd be looking for in the CRGC chart, but as always, it's merely my interpretation. Thank you for watching, and trade smart.